Hey traders, again doing some homework, cleaning up some charts. I like to do this. I know I touched this chart recently, but I didn't update all the levels, so I'm going to go backwards and update them. So Snap um, reported earnings and then spiked tremendously. So when it fell hard, I think it fell 20% or some ridiculous number on somebody else's earnings. I think Facebook reported and got shellacked, and Snap fell 20% before the earnings. That was a no-brainer to get long. Guess I don't have a brain because I didn't make sure that my orders went through and I wasn't on board, but I did share it with friends. So then it rallies 50, 60%, whatever the bounce was. And if you bought it here, maybe you should watch more videos. It's not everybody knows charts, but there are some easy things you can learn from the videos. Is when it is not an obvious entry point. Also, our perception is a little whacked out because today I had the question, will it ever stop falling? And I'm thinking to myself, it just rallied 60%. It's allowed 2 red ticks. In fact, 1 red tick. Okay, so it fell a little bit, but it just rallied 60%. And it just fell 25% before that. So it is violent and the pendulum swings. So it's just normal. So let's see if we can put some reason to it and project what could happen from here, because that's the bottom line. In order to do that, I have to clean up the lines I have. Let me move this one out of the way and I'll tell you what that was. I'll move it out of the way. Clearly, this is a giant gap opportunity. I'll just throw it to the right because of this. Eventually, it'll come into play. Not now. This is not necessary. This is a resistance line that is correct from this line, but there's one just above it. You can leave it there. That orange line there is automatic. This is where it traded the most. So it's a pretty high volume spot based on this period of time, which is pretty substantial. That goes back to October of last year. So during that period of time, this is where most of the action has happened. The second most place is down here, probably yesterday or this past week, because of these volume bars. So these volume bars are the same as these volume bars. Okay. All right. So let's see what else we can do. This line is, we'll rename it just resistance. I don't know when I drew it first. And let's shorten it a little bit. It's too much visual noise. Whenever we come up to it, we know it's going to be resistance. Because of levels, look left. So this is one of those things you pick up. See this one here? It says must hold. It didn't hold. If lost, new leg lower. And I put the dots to here. Clearly they overdid it. They went all the way to here. But if I zoom out, I bet you this wasn't the bottom. I mean, there was even more potential damage that could have happened. But at 24 bucks, 24 bucks, I mean, that was a no-brainer. Again, I don't have a brain because I wasn't long. Okay, so this was an important line. I'm going to delete it because I have this guy here. And I'm going to move this guy down here. So this whole zone is going to be difficult. In fact, I'm going to make it a zone. This is the end of it. This whole place here is going to be, you know what? I like the line better. I'm looking for ways of people to act. So I know that if it gets to here and I'm not long yet, I shouldn't start longs. That's what the point of resistance is. So let's say it rallies to here and that's where I decide to buy long. That's a mistake. I should wait either for them to cross it and come back and touch it to go, or to fade and come back and take it on a breakout, because then the breakout could carry to here with a few resistance lines. You see what I mean? So this whole zone should be resistance because that was the place where they fell apart. And that's about the line from which they fell apart. So let's say they rally back here and then they fade a little bit and then they come to here at some point. They close this little gap right there, whatever that was all about. Okay, so we are here. That is not where I get long. If I waited this long, that's not where I would get long. I would wait for a dip, because the dip should come, and then have them come back to here, and then take the breakout. Or wait for the breakout to happen and chase it. So I either buy the dip from that point or buy the rip from that point without dipping. So they either fade and break it out again, or they come here, they hesitate a little bit, and then they just take it. But to get long at it, I think is suboptimal. How about that? All right, so as far as can it fall lower? Yes, there's a giant double gap of sorts, weird situation. So what do I want to look for? Control. It will first need the market to stabilize. I'm going to ignore this. This was just sheer stupidity. I don't know who sold it down here. I mean, what are you doing? Selling the stock 22% down for no reason. That's ridiculous. Wait another day. What do you think? It's going to fall another 20% down? Anyway, so you want to look for control. By the way, this says support from the 10th. It was. It's no longer. It's just a point of contention. In fact, I can delete it. It's just noise. So this shows bulls need to establish control short term. That's the goal. It's not connecting dots. It's just establish control. Notice I'm ignoring this altogether. So now, which means dips need to be bought without a lot of damage. So you can come back to here and still be okay. You can come back to here and you'll still be fine. Go lower than here, and then I ask you why. Why are you doing this? Why are you retesting the bottom that you had established so well until the stupid Facebook drop? So establish footing, establish a pattern, tackle one loser at a time. So the first line that you're going to tackle, which could be, by the way, every resistance line becomes a potential catalyst. So this is the next catalyst to beat. Whatever failure here, maybe overnight, look at the overnight. So I'm going to put it in white just for it to stand out a little bit inside this visual noise. Maybe even do the lines in white. I'm having a Bob Ross moment. Put a little tree over here. So this is your first short-term test trigger, whatever you want to call it. You take that out, you get to here. Second test, which is exactly where it is. So resistance 1, resistance 2. Every resistance becomes the trigger once it's taken out. And then you have bigger lines to deal with, older lines. So I'm going to shorten that one again for visual noise. Whoops, that wasn't so good. For visual noise. And this one will come down the pipe. Also, we'll shorten it. So what we just did, we cleaned up the chart. Okay, so there's this yellow line. What's that all about? Now, as bullish as this action may have been, ignoring this, the bears are in charge on higher time frame. What's a higher time frame? These are short-term ticks we're talking about. In general, we're looking into a descending channel. So if I were to put a channel there, I bet you I can. So again, I'm not connecting dots. I'm showing you behavior. They're selling down inside a channel, not connecting dots. I'm not trying to say, okay, here, hug the... No. The behavior is bearish. In fact, I'm going to do it that way because it's a clearer statement than an arrow. The arrow is clearer to me, but again, I'm not trying to touch the sides. So how do you snap out of this riptide? You swim sideways. First, you stop making lows, new lows. You make higher lows. Lower highs are fine, which is happening. And then you'll come to lows somewhere. And then you snap out of it. And then you establish an ascending trend like this yellow one, only going this way. That's how you tackle a recovery rally. I'm on a 4-hour chart. I'm not expanding further because this is the only thing that matters. So I could look at a weekly and come up with more ideas, but this is what matters. In fact, if you're an active trader, you might want to drill down to the 2-hour chart, and now you see or an hour chart. In the live room, where I share my screen all day, we come down to 30-second charts, but that's for active trading. But even for strategizing, now I have an idea as to how the lines are playing. Like this little gap is clearer, whatever that is, and you can see the lines closer. But for this purpose, I spoke on a 4-hour chart, and this is what the action looks like. All right, for curiosity's sake, let's go to a 1-day chart. So now we're looking at a whole year's worth of data, 5 years worth of data. Now we're getting somewhere. Let me take out, see this little white dot? I had a trade set up here that I said, oh, it's going to 18, maybe 20 or whatever. And I got mocked on Twitter. And then it did this. So I clearly booked somewhere up here. I'm that kind of guy. But here it was a confluence of things. Come on, update. Okay. It was a descending channel, meeting horizontal levels, meeting inverse head and shoulders. A whole bunch of little patterns came together, and then it exploded. So this is the whole lifetime of the stock. Came out of the IP. What? Okay. So somebody who doesn't believe in charts. Okay, let's go. First week of trading, second week of trading. Draw the line. Look at this candle right there. Look at the first 2 weeks. Look at the bottom before that crazy Facebook drop. That one right there. And here's the Facebook crazy drop. It matches up with this. So it is, you can see a visual line here that kind of changed the game, right? They came and failed miserably. They tried again, and then boom, off to the moon. It took a pandemic. That's the pandemic? No, that's the pandemic. Okay, there we go. So high, failed miserably. Took a long time to come back. Failed. Took shorter time to come back. Pandemic. The world stopped working. Justifiable. Recovered like nothing happened. Boom. Breakout. Test it for footing and gone. This clearly stupidity. Clearly. Now they gave back most of it. Fresh new owners. Stronger hands. So don't get married to the stock idea. And here's the thing. If I'm long the stock, I'm not adding. If I'm looking to get long, I'm not convinced this is the best opportunity out there. So I'm not saying get long snap. I'm trying to clean up my chart, put the lines that matter, and that would be the way the chart will unfold, I think, assuming they don't want to revisit and close all these gaps. If the markets have a hiccup, guess what? We're going lower and filling some of these gaps, at least to the gap line fill here. All right, so then if somebody wants to get long for the long term, they would take a small bite. Part 1 of 2. Hit the like button if you like it. If you don't watch. No, I'm just kidding. Later.